Welcome to What the F Happened, Fraud and Financial Crime Deconstructed, a Defend podcast where we break down what's actually happening across fraud, scams, AML, and financial crime.
Each episode cuts through the noise to explain the tactics, trends, and real-world impact behind the headlines, so you're better prepared for what comes next. Let's get into it. We are pulling our material today from the 2026 Celent Model Risk Management Awards, and our mission is to explore how breaking down rigid silos between fraud and anti-money laundering.
Or AML.
Right, AML. How breaking down those silos is just completely revolutionizing how banks fight financial crime.
It's a huge shift.
It really is. And more importantly, we are going to look at why this massive technological leap is absolutely critical for your money, your security, and, well, your everyday banking experience.
Because it really does affect everyone listening.
Exactly. Okay, let's unpack this. To understand why unifying these teams is such a massive deal, we have to look at what they were up against, right? The tech-winning awards right now is just mind-boggling.
It really is. I mean, the Celent Model Risk Manager Awards, they're essentially the Oscars for financial risk technology.
The Oscars of risk management, I love that.
Yeah, they celebrate financial institutions that are doing something truly transformational, pushing the boundaries of what is actually possible with forward-thinking tech.
Just to manage compliance and risk.
Right. If you win one of these, you aren't just like updating your software. You are fundamentally changing the industry standard.
And the industry is trying to solve this modern wave of financial crime in a few different ways, right? The runners-up highlight just how varied those approaches are.
Oh, absolutely.
Like, some are just throwing massive cloud computing at the problem. You have HSBC, which won for their Global Social Network Analytics Platform, or GSNA.
Right. That project was massive.
Yeah, they're analyzing over 40 billion records.
Wait, 40 billion?
40 billion with a B, across more than 250 different systems. Yeah, building these massive network-based risk profiles on Google Cloud just to detect crime on a global scale.
40 billion records is almost unfathomable to me.
Seriously.
And then you have institutions focusing purely on speed, like Bank of Ireland.
Oh, right. They moved away from the older tools, didn't they?
Yeah, they moved away from older batch-based monitoring and implemented real-time AI to shift from being reactive to proactive.
So they aren't chasing the money after it's gone?
Nope.
They are essentially locking the vault door while the thief's hand is still on the handle?
That's a great way to put it.
And then others are focusing on pure scale and integration. Like Zenus Bank, they won because they provide embedded banking to partner institutions in over 180 countries.
Which is a logistical nightmare for compliance.
Right. So to handle that, they embedded KYC, know your customer rules, along with AML and sanctions controls directly into their onboarding process.
Embedding it right from the start.
Yeah. By treating compliance as an embedded function rather than like an afterthought, they are handling $4 billion in monthly payment volume.
$4 billion a month.
Yeah. So we have HSBC crunching 40 billion records, Bank of Ireland freezing payments in milliseconds, and Zenus banking the whole world.
Right.
But the top prize, the actual Model Risk Manager of the Year, didn't go to any of those massive global conglomerates.
No, it didn't. It went to a mid-sized player.
NASA Federal Credit Union, an institution with, about $5.8 billion in assets?
Yeah, and about 230,000 members.
Right, and they won because they tackled the biggest structural problem in banking, that silo we talked about.
Exactly. They managed to unify fraud and AML into a single platform.
But I have to ask, why were fraud and AML ever separated to begin with?
That's a good question.
Is it because fraud is essentially like a security guard tackling a shoplifter at the door, split-second real-time action, while AML is more like a forensic accountant sitting in a back room quietly tracking a cartel's finances over 6 months?
That is the perfect analogy. Historically, the separation made complete logistical sense because the nature of the crimes dictated different approaches.
Right, they're just different beasts.
Exactly. Fraud is immediate. A bad actor tries to use a stolen credit card, and the bank has milliseconds to decide whether to authorize or decline that transaction.
Right, before the person literally walks out of the store.
Exactly. AML, on the other hand, is longitudinal. You're looking for structuring patterns over time.
Like someone depositing exactly $9,900 every Tuesday for 3 months.
Right, just to avoid that $10,000 federal reporting threshold.
Sneaky.
Precisely. So the investigative skills are different, the timelines are different, and so the technologies were built differently.
Makes sense.
Fraud systems were built for speed.
Hmm.
AML systems were built for deep historical data crunching.
But the infrastructure eventually cracked, right? I mean, NASA FCU was in a really tough spot.
Oh, they definitely were.
They are this 75-year-old digital-first credit union, and they were stuck on a legacy AML system that was like 7 years old.
Which is ancient in tech years.
Seriously. And it sounds incredibly rigid.
Right.
It operated on a fixed data schema, meaning they could only use the exact data types the vendor explicitly allowed.
Yeah, you couldn't just add new feeds.
Right. It ran in nightly batches, and it couldn't easily ingest outside data.
And while their AML team was stuck in the dark ages of nightly batch processing, their fraud team was basically living in the future.
Oh, because of DataVisor.
Right. NASA FCU had been using a platform called DataVisor for their fraud detection for 3 years.
And that's real time.
Yes, DataVisor is a highly flexible, data-first architecture that works in real time. So the contrast between the two departments, like the speed at which they could operate, was becoming impossible to ignore.
The breaking point is almost comical, honestly.
It really is.
The legacy AML vendor came to NASA FCU and hit them with a 30% price hike on their license renewal.
Ouch.
Imagine paying 30% more for a 7-year-old system that only updates once a day.
It's just bad business.
But beyond the money, if an AML system is just doing nightly batch runs, isn't that basically useless today?
Pretty much, yeah.
I mean, when you or I transfer money digitally on an app, we expect it to be instant. If the bank is only checking the logs at 2 a.m., the criminal is long gone.
What's fascinating here is how this forced the issue of what the industry calls FRAML.
FRAML.
Yeah, FRAML, the unification of fraud and AML.
Ah, okay.
The reality of modern financial crime is that the boundaries between the two disciplines are just blurred now.
How so?
Well, take a mule network, for example, where criminals use legitimate-looking accounts to move dirty money.
Right, to wash it.
That is fundamentally an AML problem. But how do those criminals get those accounts in the first place?
Oh, identity theft.
Exactly. They get them through account takeovers or identity theft, which are fraud signals.
So the criminals are triggering alarms in both systems simultaneously.
Yes. And when a mule network triggers both fraud and AML signals, but your teams are on different systems that literally don't talk to each other, you have a massive blind spot.
That's terrifying.
By working with DataVisor to build a unified FRAML module on their existing modern architecture, NASA FCU wasn't just, avoiding a 30% price hike.
Right, they were fixing the core issue.
They were fundamentally closing a structural gap that criminals have been exploiting for years. Nightly batches fail because modern crime doesn't wait for the end of the business day.
You need to analyze the transaction the second it is initiated.
Exactly.
So how do you actually build that? You can't just slap a new user interface on old batch processes.
No, you definitely can't.
You have to rebuild from the data layer up. DataVisor and NASA FCU built what they call a centralized intelligence hub.
Right, that was the key.
This hub features real-time feature computation. It operates on the principle that if your decision needs to be real-time, your feature needs to be calculated in real time.
And your rule needs to be implemented in real time.
Exactly. Zero latency.
And because they broke out of that rigid, fixed schema legacy system, this central intelligence hub allowed them to bring in a massive influx of third-party data to enrich their detection.
So they weren't just looking at the transaction amount anymore.
Right, they were looking at the entire context of the user.
Let's walk through how that actually works, because this is where the tech gets incredibly sophisticated.
That's amazing.
They integrated several different intelligence feeds. You have iOvation for advanced device intelligence and tagging.
Yeah.
You have Thomson Reuters Clear, bringing public records into the mix. You have LexisNexis for global sanctions screening.
Right, checking watch lists.
And Q6 Cyber, which provides live dark web intelligence.
To really understand the power of this, picture a single transaction happening. Okay. A user attempts to open a new account and fund it. In milliseconds, the system doesn't just look at the money. It looks at iOvation to see if the phone being used has ever been associated with a known fraudster.
Wow.
It crosses that with Thomson Reuters public records to ensure the identity provided actually matches the physical location of the device.
That's smart.
It checks LexisNexis to ensure that person isn't on a global watch list, and it queries Q6 Cyber to ensure that specific identity isn't currently being auctioned off on a dark web forum.
And all of that synthesis happens instantly.
Instantly.
Here's where it gets really interesting. With all this data flowing in, they employ a visual knowledge graph.
Yes, the visual aspect is huge.
So instead of a human analyst staring at a linear spreadsheet of transactions trying to find a pattern, this graph maps out the relationships visually.
Which changes everything.
Imagine you have 5 different account applications. They use different names, different addresses, and different funding sources. To a human on the old system, they look completely unrelated. But the knowledge graph instantly connects the dots. Like, hey, all 5 of these quote-unquote different people are using the exact same device ID and routing through the same IP address.
It instantly exposes a hidden, coordinated fraud ring.
Yeah.
That visual link analysis is crucial. It gives the investigator an immediate, undeniable reason to dig deeper into a coordinated network.
Because they can literally see the connection.
Exactly. A traditional linear transaction review would completely miss the fact that 5 seemingly unrelated people were sharing a phone.
That's a massive upgrade.
Right.
But it makes me wonder, if you feed all this incredible data into the system, how does it know what to look for if the criminals invent a brand new trick?
That's the million-dollar question.
Right. If the system relies on rules, doesn't a human have to notice the new trick and write a rule for it first?
Well, that is where their layered machine learning or ML architecture takes over. They aren't just relying on static rules anymore. They use supervised machine learning to hunt for the tricks they already know.
So that's based on past data.
Right. Those models are trained on NASA FCU's known historical fraud typologies. But the true game changer is the unsupervised machine learning, or UML.
How does unsupervised ML work if it doesn't have any rules guiding it?
Unsupervised ML doesn't look for specific predefined behaviors. It looks for anomalies and connections across the entire data set.
So it's just hunting for weirdness.
Exactly. It constantly hunts for emerging novel clusters of activity. For example, imagine 50 separate accounts suddenly start making identical $499 deposits.
Okay.
At exactly 3:00 a.m. on a Tuesday, all from different devices, but routing through a similar geographic IP range.
Very specific.
Right. No human analyst wrote a rule saying, watch out for $499 deposits at 3 a.m. from this specific zip code.
Because why would they?
Exactly. But the UML flags it anyway, simply because the sheer density and coordination of that clustering is a mathematical anomaly.
So it catches the bad guys before we even know what the bad guys are doing.
Precisely.
That is wild to think about. The machine finding the shape of the crime before we even know the crime exists.
It's incredible tech.
But catching the criminals is only half the battle, right? The other half of this industry is dealing with the crushing, just soul-sucking amount of regulatory paperwork and manual system tweaking.
Oh, it's brutal. Financial crime compliance is incredibly labor-intensive.
It is an enormous operational burden. And this is where the implementation of agentic AI at NASA FCU really shines.
Yes, the AI agents.
They introduced 2 major AI breakthroughs to handle the busy work. The first is AI rule optimization. In the old days, if you wanted to adjust the threshold for an alert, say, you were getting too many false alarms on wire transfers, an analyst had to export days of data to Excel.
Ugh, spreadsheets.
Right? Run manual calculations and hope they didn't break anything or miss a critical risk.
Now, AI agents analyze the live production data. Yeah. The analysts just tell the AI what balance they want between catching true positives and reducing false positives, and the agent auto-tunes the rules.
That's amazing.
For example, they had a rule monitoring wire transfers that triggered an alert anytime someone moved over $2,000.
Okay.
The AI analyzed the historical data and recommended raising that threshold to $4,000.
And what did that do?
Well, the result of that single tweak was a 30% drop in alert volume for that specific rule, while the system's precision and recall remained absolutely identical.
Wait, really?
Really. They didn't miss a single illicit transaction, but they wiped out a third of the annoying alerts that human analysts used to have to click through one by one.
That saves so much time. And the second major breakthrough was the SAR narrative AI agent.
Oh, this one is huge.
A SAR is a suspicious activity report. It's a formal federal regulatory filing. Previously, a BSA analyst, the folks responsible for Bank Secrecy Act compliance, would spend hours compiling case notes, reviewing transactions, and drafting a detailed narrative to explain to the government exactly why this activity was suspicious.
Hours of work for one report.
Hours. But with the AI agent, it generates the narrative in 30 seconds.
30 seconds.
Yeah. The analyst just spends a few minutes reviewing and editing it.
It is a massive shift in resource allocation. freeing up highly trained investigators to actually investigate rather than type out formatting boilerplate.
I have to jump in with some critical pushback here, though.
You're
We are talking about letting an AI write federal regulatory reports that go directly to the government. That sounds incredibly risky.
It does sound risky, yes.
We all know large language models can hallucinate. What if the AI just invents facts or gets the details wrong on an official government document? The legal liability there seems huge.
This raises an important question, and it is exactly the primary concern regulators and internal auditors have.
I'd imagine so.
But NASA FCU didn't just give a generic chatbot access to their servers. The AI is highly constrained and specially prompted to reflect the credit union's specific analytical voice.
Okay.
It operates in a read-only capacity, pulling only from verified, structured case data within the platform. It cannot browse the internet to fill in blanks.
So there are strict guardrails in place.
Very strict. And more importantly, the output is fully editable and never auto-submits.
Oh, it doesn't auto-submit.
No, never. It still absolutely requires a human BSA officer, a trained, legally accountable professional, to review the narrative, make edits, and actually file it.
So it's an assistant, not a replacement.
Exactly. The AI doesn't replace human judgment, it just cures blank page syndrome.
Right.
The BSA analysts, who were actually quite skeptical at first, became huge advocates when they realized they could stand behind the AI's output. It cut their filing time by 90%.
90%. That's incredible. It sounds incredibly smooth when we talk about it now, though.
Yeah, it always does in hindsight.
Right. Real-time graphs, AI doing the paperwork, machine learning, catching criminals. But to really appreciate this achievement, we have to talk about the reality of the implementation.
Because it was not easy.
No. Getting to this point was a grueling 9-month slog.
It was far from a simple software update. NASA FCU's COO, Doug Nahas, led this delivery team alongside DataVisor's chief product officer.
They spent 9 months on this transition, right?
Yeah, which included running the old legacy system and the new platform in parallel for 3 solid months, just to ensure absolutely nothing slipped through the cracks.
And the hardest part wasn't training the AI or setting up the machine learning models. It was the data normalization.
That is always the highest hurdle.
Always.
You were trying to merge fraud data and AML data, and structurally they speak different languages.
How so?
Well, fraud data includes declined transactions. If someone tries to run a card at a gas station, fails the PIN check 3 times and gets declined, the fraud team needs to know that because it indicates an attempted crime.
But AML data only looks at settled transactions. Money laundering requires the money to actually move from point A to point B.
Exactly. So, taking credit card authorization data, that includes declines, and putting it alongside approved, settled wire transfer data required complex, custom deduplication logic.
You can't just dump it all in a single database.
No. You would get duplicate entries or corrupted timelines. You have to teach the system how to reconcile 2 fundamentally different views of the financial world so that it understands both the intent of a declined swipe and the state of a cleared wire.
They also had to align the human teams, which sounds just as difficult.
Oh, culture change is always hard.
The fraud team is running on adrenaline, making decisions in milliseconds. The AML team is methodical, building cases over weeks, getting them into the same workflow, sharing the same cues, but respecting their different regulatory requirements was a massive organizational hurdle.
But the payoff for that 9-month slog was unarguable. The results are some of the most impressive metrics in the industry.
Yeah.
They achieved a 42% reduction in AML false positives.
Let's ground that metric for a second, because a 42% reduction in false positives isn't just a back office victory.
Not at all.
So what does this all mean? Like, why should you, the person listening right now, care about some credit union's back office tech?
Because it impacts you directly.
Exactly. It means that when you travel overseas and try to buy a coffee, you are vastly less likely to get your card needlessly blocked at the register.
Yes.
The system is actually smart enough to understand the context of your behavior, cross-reference your device, and realize it's actually you, rather than blindly triggering a quote-unquote foreign transaction rule and freezing your funds.
It creates a frictionless experience for the legitimate consumer while building an incredibly hostile environment for the criminal.
Which is what we all want.
And crucially, while cutting those false positives by 42%, they maintained 100% true positive retention.
Wait, 100%?
Yes. They didn't miss a single actual case of money laundering while cutting almost half the noise.
That is the holy grail of risk management.
Furthermore, they saw a 41% reduction in manual review time across the board. AML backlogs that used to take days were reduced to hours.
Unbelievable.
And from a financial perspective, consolidating into a single FRAML platform saved them $200,000 annually in vendor costs alone.
Just in vendor costs.
Right. And Doug Nahas noted that when you factor in the efficiency gains, they essentially gained the equivalent of 2 full-time employees, or FTEs, just through sheer operational efficiency.
Wow.
For a credit union operating with around 380 employees, getting 2 FTEs back without hiring anyone is a material victory.
And NASA FCU isn't stopping here either. Their path forward is super aggressive.
Very ambitious.
By the summer of 2026, they plan to move that AI auto-tuning agent out of beta and into full production.
So rule optimization won't be something they do periodically.
Right. It will be a continuous living process where the system constantly adjusts itself based on real-time data flow.
They are also expanding their real-time monitoring to cover instant payment rails. The goal is a fully unified, AI-driven risk ecosystem across every single payment channel.
But their long-term vision is what truly shows the scale of their ambition and why they deserve this award.
Utility model, right?
Yeah. They have this idea for a utility model, which sounds to me like they want to become the infrastructure provider for everyone else. Is that the goal?
That is the core idea. NASA FCU recognizes that smaller credit unions simply do not have the scale, the budget, or the technical headcount to deploy a massive FRAML capability like this.
It's just too expensive for them.
Exactly. So the concept on the table is for NASA FCU to supply this unified platform as a utility to smaller institutions.
Oh, that's brilliant.
It effectively democratizes Tier 1 bank security, raising the baseline for the entire financial ecosystem.
It is a brilliant way to leverage their hard work to protect a much broader base of consumers. But as we wrap up, I want to look at the broader implications of this tech. We've talked about AI writing narratives and algorithms hunting for undefined crimes.
You know, it feels like we are crossing a threshold.
We are, and it leaves us with a fascinating, almost philosophical challenge to consider.
I'm intrigued.
We are reaching a point where AI agents are successfully drafting the regulatory narratives that go to the federal government.
Right.
They are automatically tuning the detection thresholds that literally define what constitutes suspicious behavior.
Yeah.
So, at what point does the core definition of financial crime shift from a legal standard interpreted by human judgment to an algorithmic threshold defined strictly by machines?
That is a heavy thought.
Yeah.
If the AI is deciding where the line of suspicion is drawn, who is really enforcing the law? The human or the math?
Exactly.
It's something the entire industry is going to have to reckon with very soon. But for now, we can at least take comfort in knowing that the bank security guard tackling the shoplifter and the forensic accountant tracking the cartel are finally working together.
They're finally in the same room. They are sharing the same brain, and your money is a lot safer for it. Keep questioning, keep exploring, and we will see you on the next deep dive.
You've been listening to What the F Happened? Fraud and Financial Crime Deconstructed, a Defend podcast by DataVisor. If you want to keep learning between episodes, check out Defend Training, a set of self-paced online courses for fraud and financial crime professionals, practical and built around real-world scenarios.
And you can earn CPE credits through the ACFE San Francisco Bay Area chapter. You can find it at datavisor.com/defendtraining. The link's in the description.